afternoon from Germany. This is Pascal speaking, second week of 2023. And today we have a discussion. Jerome Powell is speaking in Europe. Yeah, a lot of market participants are freaking out, but I think it's not really an important event. But let's dive into this right away. At first, let's begin with the market. What happened yesterday, Monday, beginning of the week? We went higher a lot. Let's see it on a lower time frame. We can see that the high points were at previous resistance levels and right below our drawn line here at 11,400. Yesterday's high was 11,385 points. And on a lower time frame, we will see again we had a nice reversal here. Right at the opening of the market, we made new highs. We're rising to a top here at 11,325 points. Went low here and had higher highs here. But then you can see we had this sideways trading phase, stage 2 of a reversal. And then we had confirmation as soon as we broke below the previous lows here and made lower lows, lower highs. And we had a 100% reversal from the breakout of the day, as you can see. And now we are back in the supporting area here during European session. And now we are trading lower. We had the retest here of the resistance level now. The supporting area is now a resistance. And we are trading right at the 11,000 level like last week. But we managed to close above, and that's the important thing. We managed to close above 11,000. That's a good thing. And we have seen that we had higher price levels this week. Hope we can hold this level. And yeah, let's see if we can hold above 11,100, the level we are currently trading at. And what happens when Jerome Powell is speaking or having a discussion in about 10 minutes. I will show the live stream. Don't know if it's really important because the topic is not about interest rates, but it is about independence of central banks. Let's see for the Federal Reserve here, and I will show you the meeting. Let's just bring this up here, up. Where is it? Here. So here we can see calendar. Where's the calendar? News and events. And then calendar. And there we can go to Tuesday, January 10th. Here is the live stream link. And then at 9 a.m. Eastern, we can see it. Just started here. And then later we can watch it there. Should be able to watch it. Hope so. Yeah, I think it will play later there. But first, let's start here with the market. So what else has happened during the last days? Crude oil was nice. As you can see at the 50% Fibonacci level, we had the rejection here. We talked about this the previous days. And this was a previous support level, now acted as a resistance and was rejected there right away. Now fighting again with a 38% Fibonacci level here. And let's see if we can go to higher levels again. But this was a nice level to take on a short trade. I have no position right now in crude oil. I still have a position in natural gas, a short put position right at the money here with the put strike. We went higher yesterday, but natural gas is still bearish. As you can see, we made highs here about, what was the high point? $4.12. We are back at $3.70 today. It's still bearish, as you can see, trading below moving averages, and the $4 level is a psychological resistance level, and we couldn't manage to stay above this level. So more weakness here. Let's see if the $3.50 level can hold. But as you can see here, it's pretty weak. We had even negative prices on European energy exchanges for gas deliveries and for electricity. So you were paid if you needed electricity was really weird. It was on December 31st, so the last day of last year. We had so much wind that the prices went negative on electricity exchanges here in Germany, in Leipzig. And you see why, because also the natural gas prices are going down and therefore electricity prices are going lower. But the customers won't have these low prices right away. So they have to wait for lower prices to come. Like here at the stock exchanges, we already see that natural gas prices went down big. What else do we have? We have, let's have a look at S&P 500 future, ES future. There's almost the same picture like Nasdaq here. We went to highs yesterday of 3,973 and we're pulling back today half a percentage point. Right now, let's see outside regular trading hours. So there we see it pulling a little bit lower, so a huge wick on the upside here and still trading in this sideways trading phase. So we need the breakout and to settle above this level to have clear breakouts to the upside, but that's not happening right away now. Okay, what else do you want to see? Maybe some single stocks. Tesla still interesting. Where's my Tesla chart here? Tesla here. Tesla is now trading higher than on Friday. Friday low was $101.20, again above the psychological $100 level. Since then we were trading higher for 17%, so nice up move, but it's still looking pretty weak on a day chart. As you can see, we are still trading in this sideways trading phase here. We need a break above $125 level to be clearly outside of this level, and then we will probably see more and higher price levels, but for now it's still in this sideways trading phase here. And let's have a look at what else do you want to see? Maybe Meta. Meta had a strong week last week and a strong day yesterday. As you can see, we closed higher yesterday, not yesterday, on Friday, but yesterday we had a red candle, but almost at the same level of Friday. So a small wick on the upside, but trading lower pre-market today, as you can see, at $127.80. Let's see where Meta will close, but this is completely different to Tesla. This here is a strong stock compared to Tesla. If you have some questions, just write them in the live chat and I can answer them for you. Yeah, JC is trading crude oil. Yeah, we already talked about crude oil. As you can see, it's on the rise right now, but with huge wicks on the upper side. And we are still in a downtrend, as you can see, with lower highs and lower lows. We have to see where the next lower high probably will be, if it's here at a 50% Fibonacci level, or if we will see higher levels like here between $78 and $78.50. Could also be that we will have the next high level here at this point. We have to wait for a reversal here, but this was a nice point to go short. We discussed this in live streams last week. Which broker do I use? This is Interactive Brokers. Trader Workstation is the charting. I know it's not the best charting software here, but it's free with a broker. And for me, it's completely enough because I'm not a real day trader. I mainly swing trade. And yeah, if you want to have nicer chart view, then you can use Trading View. But for me, Trader Workstation here is enough. And VIX, we see still sideways trading on VIX. Last Friday we went down to levels of 21 because this week we have major data like the Jerome Powell discussion, and on Thursday, we talked about this on Friday. On Thursday, we will have CPI data again, consumer price index, and therefore the expectation for volatility is rising. As you can see, we are 1.3 points higher now than on Friday closing. It's still not a lot. It's still here sideways trading for the volatility, but yeah, it can change quick. And we have Euro USD. We are on the upper side here, the previous highs. Yesterday we tried to trade higher, but we closed right at the tops from December 14th. Today we are trading right below. Let's see if we can have higher highs to continue this uptrend here, or if we will fall back into this sideways trading phase. We tried here to break out to the downside, but then we suddenly turned to the upside and had two strong green days on Friday and Monday yesterday. And yeah, let's see if today something changes here. Let's just bring this here to correct day chart now. If something changes here and we will stay within this trend, or if we will have the breakout to the upside here. Do you swing trade TQQQ or SQQQ ever? What do you look at to make decisions? No, I'm not able to trade exchange traded funds, and especially not the leveraged exchange traded funds, because I'm not able as European to trade US ETFs, and I would never backhold on leveraged or negative ETFs, because yeah, you will lose money on the long term. These are products not made for long-term investments. You should only trade them within a day for day trading, maybe 1 or 2 days, but never more than this because of past dependency effects. We already talked about this. If you look at TQQQ, I can bring up the chart, you will see the big difference between TQQQ and the Nasdaq. So I will just bring this up to you that you can see the difference. And here we are. So you see the previous high points here were at about 460. It's an old one. Can I see the correct one? Here's the stock. Sorry, this is the correct one after the split. And here we see at the $24 the previous high points, and right now we are at $17.70. So if we reach previous highs in Nasdaq, we probably won't be at the $24 level, because the setback of leverage is the crucial thing here, and therefore we will not manage to go back to this level. But if we have consecutive green days in Nasdaq, then it's good to have TQQQ, because your leverage will be set back to 3. That's good. But as you can see, we are in a sideways trading phase. It's going up, down, up, down, up, down. So you will lose in a sideways trading phase, and that's a big problem, because you will have lower highs. So with Nasdaq, we traded already at the high points here from before Christmas, but here you can see this was a lower high. So it's not interesting to backhold on TQQQ or SQQQ, because you will lose money, and therefore, yeah, never backhold on these leveraged ETFs. Yeah, let's see if we can see the live streaming here of Jerome Powell. I'm just figuring out if I'm able to see it here, because yeah, the link leads here to this website, and I cannot see the video here. So if you have a special link, but maybe I can find it on YouTube, so maybe it's easier to find it there. Just bring it up. So just see it here. Okay. Yes.
Between present macroeconomic outcomes and future financial stability. If we look at today, superficially, the situation looks like 70s, 80s.
So it's not interesting right now, because Jerome Powell is not speaking right now. As you know, it's a discussion. It's not a speech from Jerome Powell. So he will speak about central bank independence, but it's a discussion. So it's moderated. There are more speakers than only him, and he will probably not talk about the next inflation rate and interest rate hikes. Therefore, it's not really important for the market, but like every time when the Fed chairman is speaking, it can be important for the market, because only a few words are enough to make the market rise or drop, and therefore we just have to wait here for Jerome Powell speaking, and then we will probably see what happens at the stock exchanges. And in half an hour the market will open, so we will have more volume and see what happens here. Okay. I will just see that you can also hear Jerome Powell speaking later. So we'll just add the second input here. Just a second. So here, hope you should hear this now.
I think you've heard so many remarks about Stefan. I can just summarize them by in the central banking community.
Working, you think?
He is regarded as a guru, that you don't know the answer, some hard question. He's the person you really can go to and get, a very deep answer to, and we'll hear more about that as things go on. I've been asked to talk about some of the early developments, more the question one that we've had.
Yeah, we will wait for Jerome Powell, and I will unmute later when he speaks. So let's just wait, and they are not on time as always. When there are speeches, it's not timed like a press conference. Yeah, but I don't think that it will move the market right away. So we will probably see when Jerome Powell is at the microphone. Okay, let's move on with gold. Of course, we can have gold here and analyze gold. It's interesting to see because the gold prices now are rising a little bit in the past weeks. Let's see here, gold futures. I will just bring up gold. So here we see gold price is on the rise for the last months, as you can see here. From December the 1st, it was here. We are now up 5.4%. Why is gold rising now? Because the bonds went to higher levels, therefore there is less interest to be earned on bonds, and therefore gold can rise. Because gold is not paying interest, it's not so interesting to hold gold for a longer time. As long as there is high inflation, and now there is high inflation, inflation is coming back right now, but the thing is that the central bank is giving higher interest now, interest payments, and therefore it's not so interesting to hold gold anymore. Therefore gold prices went down even if there was high inflation. But now we see, if we have a look at the CME FedWatch tool right here, then we can see that it's pretty sure how the path for the next interest rate hikes will be. For the next meeting on February 1st, we see a 76% interest rate level for 25 basis points move here, and only 23% for the 50 basis points move. So we can see here the comparison for the changes in the last weeks and months. So now here you see on December 9th, January 3rd and January 9th, so yesterday, you see how it switched from the 50 basis points expectation to the 25 basis points expectation. And yeah, we can also see this with the probabilities here for the next meetings. So if you have a look at this, you see for the next meeting, the highest probability is here for the 25 basis points move. We are right now at a 4.5 interest rate level, and the expectancy is 76% for a 25 basis points rate hike to up to 4.75%. And the meeting in March 22nd, the expectancy is again 25 basis points rate hike to 5.0% interest rate. And you see the consecutive meetings, the highest expectancy is for the same level. So no more interest rate hikes. This could be the highest point of interest for this year. And you see that at the end of the year, November, December, the highest expectation right now is for lower interest rate levels. Again, back to 4.75%. So let's see how this shifts. But as we have seen now, the expectancies haven't shifted away from this high point here at around 5%. and therefore gold is on the rise because there's no more safety that we will see a high point of interest rate around 5% and even lower interest rates at the end of the year. And therefore gold is on the rise right now, especially because US dollar is dropping. If you look at US dollar index or Euro USD, we have seen before, then you see that US dollar is weakening, Euro is getting stronger, and therefore in foreign currencies like Euro and other currencies like Japanese yen, the gold is now getting weaker because US dollar is less strong. And therefore they can pay higher prices in US dollar and would still pay the same amount in their foreign currency. And that's the point why gold is on the rise. So Jerome Powell is still not speaking. Yeah, that's the thing you should take into account if you want to trade gold. So yeah, the trend is your friend. Gold is on the rise, as you can clearly see, making higher highs. Let's see how far we can reach the $1,900 level or even the $2,000 level. Everything is possible because interest levels are higher than 1 year ago, but also the inflation level is still high and will stay high for the next 2 years. We will probably not reach our 2% target in inflation rate, and therefore gold should stay at higher levels here. Yeah, market is rising. It was pulling back the previous minutes. Let's go here. We have the opening in about 22 minutes. We are rising again here, as you can see. Back to higher levels, back in the supporting area here. Let's see if we can stay in this area or if we will go higher. So for the important points of yesterday, as you can see, our levels are still in place. Maybe we can move it a little bit up here, the level, to the pre-market high points, but this was a breakout level of yesterday, therefore it is important. But you see the 11,200 level, psychological round level, will be important, just 35 points away. Here's the Fibonacci level. We had the low points yesterday right above this Fibonacci level here, 11,250 points. Where is this Fibonacci level derived from? As you can see, here was the high point on December 13th at 12,330 points, and then we went down here to a low point. It was here on January 6th at a low of 10,751 points. This is the lowest point, and from there are the Fibonacci levels. So the colored ones here are the Fibonacci levels. We went above this Fibonacci level yesterday, but couldn't manage to hold it. Went back to the previous high points. As you can see, this is the white line here I drew, and this is also the pre-market high of today. So an important level, we should close above it to stay green and to be bullish. And yeah, ideally above the 11,250 points level. Don't know if we will manage it today, but this would be nice to see, to have a closing at or above this Fibonacci level here. Okay, still not speaking. A lot of speakers, but still not Jerome Powell showing up. So we will just wait to see him. Okay, what else do you want to see? Let's have a look at maybe sugar again. Sugar is interesting as commodity, because we went down below my 0.19 level I was talking about last week, but we couldn't manage to hold the level, so we went back right away yesterday. And yeah, this is what I'm expecting, that the price will maybe go back to the high points here. We talked about this 1.6% upside potential. I wouldn't trade this, but it's interesting to see that we cannot go through this level here because it's a supporting level. But on the second time we break the levels here, I will probably go in a short trade because I see 7.5% potential to the downside to the previous lows here. And this is more interesting to trade it within the direction of the trend for sugar here, SB future. And I will take on a short trade as soon as we break previous lows here and are making lower lows. You see it's pretty weak in the previous days, and I want to trade it in the direction of the trend to the downside and short sugar future here. Exxon, yes, of course, we can have a look at Exxon, XOM. Here's the chart. I think we had it in a previous one of the previous live streams already. A lot of movement you can see here, but it's stronger than crude oil prices, because you can see here we are near the high points of November. It's still in a sideways trading phase, but uptrending a little bit, because here you can see we are rising here with XOM, making higher highs and higher lows. So it's rising, but yeah, this is a big difference here for about 5% from the high to the low point, or maybe 6%. So broad range. Let's see if we can stay within this range, or if we have a breakout to the upside. For crude oil prices, it's not looking too good, but XOM is looking a lot better than crude oil prices. But we are within here, right in between the high and the low point of the range. And therefore, it's not interesting to see where we will have the breakout right now. So I would wait for a breakout to the downside or to the upside to trade this stock again. But if you are in a position, you could still hold it. Like always, no investment advice. It's just for entertainment purposes. And Jerome Powell is not speaking, so we have to wait. I think last week there was in the calendar that the meeting will start at 8 a.m. Eastern, but they changed it to 9 a.m. Probably they have more speakers there at the discussion, and therefore Jerome Powell is not speaking right now. Yeah, what to expect from CPI maybe. Let's talk about CPI. I will just bring this up again here for calendar and switch it to English, so we can have a look at the numbers for next Thursday this week. And here Thursday, CPI and core CPI as well as initial jobless claims will be important on Thursday. So let's have a look at the year-over-year data for CPI. The forecast is 6.5%, so a lot lower, 0.6 percentage point lower than the previous months. But as you can see, the previous 2 months we were lower than expected. Here by 0.3 percentage points, and in the last month by 0.2 percentage points. I don't know if inflation is really dropping this hard, this fast. But yeah, there's more potential for the market to rise if we see lower than forecasted numbers. But today some banks went out with the headline that the market can maybe underestimate the speed, how fast inflation will drop. And therefore there can also be a big shift to the downside if inflation is still higher than expected. And yeah, the forecast is pretty low compared to previous months, and therefore there's a lot of room for the market to dip if we see higher than forecasted numbers here, especially if I have here the FedWatch tool in mind, now predicting 80% for 25 basis points. But we can still see the 50 basis points on February 1st. It's 22 days left, but yeah, expectations can shift every day and pretty fast. And of course, with CPI data, this is the main number the Federal Reserve Board will take into account for the interest rate decision. And therefore, we have to wait for this important number to come out. I wouldn't trade the number itself. Always wait for the market to find the direction and then trade it, because we can see 200, 250 points right away on the outcome of the number. But we have to be prepared for this 1 hour before the market opens on Thursday, and this will probably cause more movement than the speech of Jerome Powell today. And yeah, we will see more movement here than today when Jerome Powell is speaking about the topic which isn't really important for the market at all. Yes, we know that there's no real independence of central banks. It's the same in Europe as in the US, because your president, the former President Trump or the now President Biden, is not electing but is announcing who is the next president of the Federal Reserve Board, and therefore there's no real independence. There's always something between politics and the central banks. The same in the European Union. Yes, there is an election, of course, but like in the US, the presidents of the states, like in France, the President Emmanuel Macron or former Bundeskanzlerin Angela Merkel, they talk to each other and they say, okay, if the next ECB president is someone from France, like Madame Lagarde, then the next president for European Union will be someone from Germany, like Ursula von der Leyen. So politics are involved everywhere, even in central banks, and even if they claim to be independent, they are not really independent. Therefore, it's interesting to hear what Jerome Powell has to say, because he's the chairman of the board, but we will see. I don't think that's an important topic for the market to move. So let's go back to a 5-minute chart here. Still trading sideways here. Let's just bring some more data within here. You see I have a bigger position right now. I entered here. I have now 13 M&Q longs. Took out some profits yesterday, on Friday and yesterday, but have still a more bullish position than I had at the end of last week. So I want to trade the long side. I want to see the breakout to the long side and to see higher highs than yesterday. Maybe not today, but let's see what happens on Thursday with CPI data. We are trading above moving averages right now and above VWAP here. And our parabolic SAR dots are on the downside here, indicating an uptrend on a 5-minute time frame. Let's see it on a 15-minute time frame. Here it changed right away from a downtrend to an uptrend, and you see here at ADX the crossing DI plus is moving above DI minus, and therefore it indicates a change of direction to the upside. In 10 minutes the market will open, and then we will have more volume and see if we can break pre-market highs here at about 11,200 points. Okay, DGX, Noah. Let's bring up DGX. Quest Diagnostics. I don't know a lot about this share, but let's bring it up on a day chart here. It's testing previous lows here. We had high points here at $158. Making a little bit higher highs than the last time. It's still on the rise, as you can see here, with higher lows, higher highs. So it's still in an uptrend, but we shouldn't go below the previous lows here of yesterday or the previous lows here at $147.50. As long as we are trading above, it's still in the uptrend here and it's looking good. If we want to take on a long trend here right at the bottom of the uptrend, it's also a good possibility. If you have a stop loss at the near level, maybe right below the $150 level, you can set your stop loss and you will be out when you will only lose $3 per stock. But for the upside, you have more potential here to the upside. The high point here at $158. So you have $5 upside potential, or even more if we see the breakout above previous high points here. Tokyo core CPI actual 4% forecast was 3.8%, previous 3.6%. It's lower than expected, but Japan is something different, because a lot of carry traders use this currency. And let's bring up US dollar, Japanese yen. So here we talked about this in the previous weeks. The Japanese yen is getting stronger, the same like with euro. Here we see when it's coming down, then Japanese yen is getting stronger and US dollar is getting weaker. And it is important for the markets because a lot of traders use leverage. And where can they get leverage from? they can get leverage when they use cheap money, where they can borrow money for almost nothing. And that's still the case in Japan. So they can borrow Japanese yen and then change these Japanese yen into US dollar. So they need the forex per US dollar Japanese yen. So for every dollar, they have to pay 132 Japanese yen right now. But when we go to lower levels, you know what happens. So then they have to pay more dollar to get the same amount of Japanese yen back. And this is a problem because their debt is in Japanese yen. So they have to pay more dollar to get the same amount of Japanese yen, and their debt burden will go higher. And this is a big issue for the leveraged traders here. And if we see the same pattern like we have seen in the previous months, where Japanese yen was on the rise here, so it was getting weaker and US dollar was getting stronger, and if we see now the same pattern to the downside, then this will cause a big issue for the markets, especially for the leveraged traded markets like meme stocks and so on, where a lot of risk money is involved. And yeah, we were talking about a potential shoulder head shoulder formation I want to see here. So we are still at this important level here. So we tested the lows in the past week, but we managed to hold the level. And what I want to see is a comeback here to this level here, which could be the second shoulder here around this area of 138. And there I want to see a second shoulder and then a retest of the neckline here at the 130 Japanese yen level. Let's see if we can see this pattern. Would be pretty nice here on a week chart on US dollar Japanese yen. Let's go back here. Yes, Jerome Powell is still not speaking, crazy. Okay, so yeah, they they will let wait everyone here for Jerome Powell, but as long as it's not important for the market, so we don't have to care a lot about. Can you check Amazon? Yes, of course. Let's see Amazon. So all the tech stocks are about the same because Amazon is also a large one like Apple. So pretty weak, but managed to go a little bit higher in the previous 3 days, above the previous high right now, but still in a sideways trading phase. So we need to have the breakout above the $90 level, or even better above the previous high here at 90. What was the previous high? $96.25. As soon as we go above this level, it's looking more bullish. We are trying to break out from this sideways trading phase, but what I want to see is a breakout above $96 and above the psychological $100. This would look even more bullish then. As you can see here on a week chart, it's still bearish. We are just pulling back for the second consecutive week here, but that has nothing to say because you see the previous high point was here at $145. So we have a lot of room to go to the upside and still be in a bearish trend, because previous high points were here, $185, $170, $145. Yes, maybe you can say, okay, this is a high point at $120, but even from this high point you have a lot of room back for retracements. So let's draw Fibonacci levels. So I use the low point here and the high point here. High point is $146.57 and the low point here is $86.30. So you see the next Fibonacci level is the previous high point. Yeah, we were talking about this level. I didn't know the Fibonacci level before, but you see it's the important level here. You see $96 is the important level. I can go zoom in a little bit so you will see the levels better. So you see the important level is $96 and some cents. So the previous high point here is an important Fibonacci level, and the next level is here $106. So we have to break above these levels to look a little bit more bullish, and it would still be just a small retracement to the upside and not a change of direction. Therefore we need to go above $146 to see a real change of direction here for Amazon. Is Jerome Powell speaking? No, still not speaking here. Maybe missed something. Yeah, he's speaking now. Perfect, thank you.
Pointed out on the first point, the case for money
Let's bring it here.
can require measures that are not popular in the short term as we raise interest rates to slow the economy. The absence of direct political control over our decisions allows us to take these necessary measures without considering short-term political factors. And I believe that the benefits of independent monetary policy in the United States and more broadly around the world are well understood and broadly accepted. However, in a well-functioning democracy, important public policy decisions should be made in almost all cases by the elected branches of government. Grants of independence to agencies like ours should be exceedingly rare, explicit, tightly circumscribed, and limited to those issues that clearly warrant protection from short-term political considerations. With independence comes the responsibility to provide the transparency that enables effective oversight, in our case by Congress, which in turn supports the Fed's democratic legitimacy.
Market's turning to the downside here.
At the Fed, we treat this as an active, not a passive responsibility. Over the past several decades, we've steadily broadened our efforts to provide meaningful transparency about the basis for and the consequences of the decisions that we make in service to the American people. We are tightly focused on achieving our statutory mandate and on providing useful and appropriate transparency. On the third point, it is essential that we stick to our statutory goals and authorities and that we resist the temptation to broaden our scope to address other important social issues of the day. Taking on new goals, however worthy, without a clear statutory mandate would undermine the case for our independence. In the area of bank regulation, as Tobias mentioned, the Fed has a degree of independence, as do the other federal bank regulators. Independence in this area helps ensure that the public can be confident that our supervisory decisions are not influenced by political considerations. And today, some analysts ask whether incorporating into bank supervision the perceived risks associated with climate change is appropriate, wise, and consistent with our existing mandates. Addressing climate change seems likely to require policies that would have significant distributional and other effects on companies, on industries, on regions, and on nations. Decisions about policies to directly address climate change should be made by the elected branches of government and thus reflect the public's will as expressed through elections. At the same time, in my view, the Fed does have a narrow but important responsibilities regarding climate-related financial risks. These responsibilities are tightly linked to our responsibilities for bank supervision. The public reasonably expects supervisors to require that banks understand and can appropriately manage their material risks, including the financial risks of climate change. But without explicit congressional legislation, it would be inappropriate for us to use our monetary policy or supervisory tools, for example, to promote a greener economy or to achieve other climate-based goals. We are not, and we will not be, a climate policy maker. Thank you.
Excellent. Thank you all four for these lucid remarks. Now you'll have a chance to agree or disagree with anything the other panelists just said, or you can also get into one of our main questions that you didn't cover in your initial remarks, especially if you have views on desirable reforms of central bank independence and mandates. Mervyn?
Well, I just want to say how strongly I agree with what Jay Powell just said about mandates. Independence from politicians is a great responsibility, and it cannot be misused by trying to creep into areas which have not been explicitly delegated by the appropriate political process. And the way I think about it is
the highs, making higher highs right now.
Nobody will ever create a central bank.
I just muted here because Jerome Powell is not speaking right now, so you will better understand me. Yeah, it's a panel discussion, so a lot of participants are speaking here, having a discussion. It's not a speech from Jerome Powell himself. Therefore, I don't think it's really important for the market overall. But of course, we want to hear when he has to say something. Breaking above the previous highs here. Next level, 11,200. This is the important pre-market high point. 11,205 points. Let's see if we can reach this level in the first minutes. You see that here on a 5-minute chart on Nasdaq Future we had the support on the moving averages and VWAP, and are now turning higher to 11,200 points, almost touching, and we are there, 11,200 points. So this is a strong resistance. As you can see, that's the thing why it is important to have a look at Nasdaq Future and not at QQQ ETF or leveraged ETF. The important levels can be seen here on the future, especially on the pre-market levels and on nothing else. So therefore always have a look at the future and the future price levels and on nothing else. Yeah, Tesla is up. Let's see on Tesla chart here. Tesla on maybe on the same 5-minute chart time frame like Nasdaq. Tesla is up 1.9% today. Looking good. Maybe we can see the breakout above pre-market levels. Yeah, we are already trading higher, but we need to go above $125 for having the breakout above the sideways trading range. We tried yesterday, but we were still within the level and not trading out. So we need to break out above the previous high point here, $124.48. So let's say 125. If we trade above 125, this is a higher high point, and if we close above, it's looking even more bullish. But for now, still sideways trading here for Tesla. And you see the importance of implied volatility. So if you would have taken a short put trade, so if you would have sold a put at the low point here at the $100 level, then you could have earned a lot of premium here because of high expectations for implied volatility. So a lot of movement is still expected. We are still at the 80% expectancy level here. But the more the stock rises, the more the implied volatility will drop, especially after the earnings on January 25th. Then implied volatility will crush, and therefore you can earn money just by the stock going sideways, but by implied volatility coming down. And that's why I like to trade options, because I'm an option seller. I want to trade volatility, not the direction. I'm not a directional optional trader. I trade volatility trades, and I trade the crush of implied volatility, like here. So the fear is going out because Tesla is trading sideways now and not dropping anymore like it did in the previous 1.5 months. And therefore the fear comes out of the option market and the option prices are dropping. And that's good if you have sold options and earn good premium, because now you can buy them back for a lower price, and the difference is your gain, it's your profit. Jerome Powell speaking
so
again.
Does it suggest that there are problems with the mandate, unforeseen tensions between either financial stability and monetary policy and that sort of thing? And I guess I would take the position that would not be my takeaway at all. I think what happened in both crises is that central bankers used their tools pretty innovatively to deal with exceptionally unforeseen and difficult circumstances. I think the main takeaway from the global financial crisis was the need to build far more resilient core of the financial system. And we did that. The banks did that. We did that. All over the world, people did that. And I think that financial system now is now substantially more resilient and more strong at its core. I think it held up better in the pandemic as a result. The pandemic was a different thing. It was it called for a whole of government response from a medical standpoint, and it called for use of fiscal policy and monetary policy tools in unprecedented ways. There had been a concern in the United States that Dodd-Frank had too limited the Fed's authority under Section 13.3 to do facilities and lending. The new system actually worked quite well. What it did was it required the Treasury's, the elected part of the government's approval for these emergency lending facilities. And that actually worked very well. And that's actually an appropriate thing, because these are extraordinary measures.
Yeah.
We only
It
have
worked
the authority
maybe too
during
well.
emergencies.
Now we have
To
too
the
much
elected
money.
government approving it. It was a very constructive process between us and the Treasury. So I guess to take a step back, I think that the tools that we have work. I think there's nothing wrong with our mandates. I don't see anything about the laws that govern us or provide our mandates that needs to be changed, and it seems to have worked pretty well in these two very difficult circumstances.
Yeah, that's interesting. Yeah,
Broke
there
above
is
here.
somehow, at least to some of us, a difference in the reaction in the 90s and the reactions now. So in the 90s, the public enemy number one had been inflation, as Mervyn and Ken had discussed, and that was an outcome of decision making that wasn't useful and was subject to these credibility problems. And what we tried to do then was to construct a more robust framework in terms of institutional reform that would produce better decisions that would keep inflation low. Now the public enemy number one, arguably over the next 25, 30 years, were these repeated financial crises or risks of financial crisis. And it's true that there was, of course, much more regulation of the financial sector, but not to the same extent, trying to address by institutional measures the underlying decisions in this arena. By banks, yes, but not necessarily by policymakers. So is there a case, Mervyn, you have strong thoughts on who should be responsible for financial stability and macroprudential policies? Do the events that we went through during that dramatic era of the great financial crisis made you rethink those
Amazon is
issues?
delivering my packages. They're
Well, I
ringing the
think
bell.
the answer is yes, because when the Bank of England was made independent in 1997, actually
They are
both
allowed to
the
drop
then
it off, but
Governor,
every
Lady
time they
George,
ring
and
the bell,
myself were quite content, despite some
better having
press speculation to the contrary.
Amazon coming to your house than a margin call. Market is dropping back to the level, should act as a supporting level now, 11,200 points here. But a lot more movement right now here. And it acted as a support, pulling up. Let's see on a higher time frame for the levels to the upside. You see the previous low point here is near the 61.8% Fibonacci level, 11,250. We almost reached it here to the upside already. Let's see if we can go to higher levels on the second attempt. But it's moving pretty fast right now, so maybe we'll just have 15-20 minutes more sideways trading within this area here. But it's good to see that we can hold the level above 11,200. Still bullish. Second parabolic SAR dot here. And you see the lines have more distance now between DI minus and DI plus. And the red line is above the 20 level. That's also important because here we can see the strength of the trend. The red line indicates the strength of the trend. And the more we move to the upside, the stronger the trend gets. That's a good sign. The same, let's see on an hourly chart. We see, yeah, we have to close on a full hour above the parabolic SAR dot here, and then we can have a change of direction also on the hourly chart here. You see the change of direction yesterday when we changed to a downtrend here, when we went below VWAP and the moving averages, and we have to go above, close above this level, and then parabolic SAR dot will move to the downside here to the low points and indicate an uptrend. On a 15-minute time frame, we can already see this, the crossing and the parabolic dots, and let's see it on the 30-minute time frame. Yeah, here we are still waiting for a change of direction. The ADX is already crossing here, indicating a change of direction, but parabolic SAR dots are still here at this level. And on a 4-hour time frame, we still see an uptrend. So this was just a pullback. Yeah, the uptrending and coming back yesterday. It's all within this uptrend. You see, on Friday, we already have seen at the closing, the parabolic SAR dot went to the downside and was indicating establishment of an uptrend. And we are still trading above these levels. So still indicating an uptrend, showing higher price levels. Could be stronger, the trend. It's not really strong, just trying to establish this long trend here. But you see here on ADX, DI plus is above DI minus, showing an uptrend as well. The charts is TWS, Trader Workstation. It's at my broker, Interactive Brokers. You can also have these indicators on TradingView or whatever broker platform you use. That's just standard configuration. I use here, you see the moving averages. I can have the 9 EMA and the 20 EMA. So I would just go in on a 5-minute and you can see it a little bit better. Here you see 3 colored lines. The first one here, the purple one, is intraday VWAP, volume weighted average price. And here I have the blue one and the violet one. The blue one is the 20 EMA and the violet one is the 9 EMA. So you see we are above all these 3 levels and above parabolic SAR. So it's looking good, just a stronger pullback, but here we had previous high points, so this should act as a support level and we can still close above the 11,200 point level in 2 minutes when this 5-minute candle will close. That's the reason I am not using the 1-minute chart so often, because there's a lot of false breakouts to the up and down side. Also here we see the uptrend indicated by parabolic SARs here, because you see that the dots are below the charts right now. But it can change really often. As you can see pre-market here, it changes really often. There's a lot of false breakouts on a 1-minute chart. Therefore, I like more to use 5-minute and 15-minute. Even if you intraday trade, if you're not a scalper, you can still use 5-minute and 15-minute. It worked really well yesterday because on a 5-minute time frame you had a good view on the chart. Let's just move back. That's the problem if you have a future where you have 23 hours of trading. But when you go back, you will see it right here. I'll just zoom out a little bit so you will see it better. And this was the beginning of the trading when the US market opened. You see the big push here with a lot of spill to the downside, but we managed to stay above the 20 EMA level. We just tested the 9 EMA level, but we stayed above. And this was a good sign because we made higher highs than the pre-market highs. And then we went back to 9 EMA, retested. So again, a possibility to re-enter a long trade. And we were making higher highs, retested 9 EMA here. And then finally we made the day's high. We retested, but with a lower high, you see here, and again a lower high here. So this was already the third lower high here in a sideways trading phase. And we finally broke the 9 EMA. We were just holding the level, but just trading sideways. Then we test the 20 EMA level, and as soon as we break 20 EMA level here, you see we made lower lows. We were trading outside of this sideways trading range. And you already see that the early indicator here, parabolic SAR dots, turned to the upside on a 5-minute time frame as soon as we broke the 9 EMA level. So you were prepared for going out of your long trade. Yeah, you maybe entered here a long trade, maybe late. Yeah, maybe you were late. You entered here about 40 minutes after the market opened a long trade, but you should be out here when the parabolic SAR turns to the upside, or at the latest here when we break the 20 EMA level. So you would still have made money because here you could still have caught a half a percentage point. That's not bad if you were just trading the future or QQQ without any leverage here. And yeah, then we were still trading sideways, trying to go again above. So here you see a change of direction. This is a the bad thing about the indicator, it's maybe sometimes too early here on a 5-minute time frame. You think, yeah, okay, we will go higher now, but no, we are making lower lows here, and again it's turning to the upside. Retesting VWAP. VWAP acts as a support, and you also see the Fibonacci level right below VWAP. Yeah, we tried to retest it, and then we went big below the previous lows and below the Fibonacci level, and there was more sell-off here 1 hour before the market closed, and we stayed all the time below 9 EMA level, and therefore it was pretty easy to see yesterday and to trade it to the upside or to the downside. And yeah, you see now parabolic SAR always stays above the trend, and yeah, it was pretty easy. And finally we closed here at day's low, and you could close out your day trade. So this was easy to see. It's not like this every day, but yesterday was an easy day for trend traders. If you were trading to the up or to the downside, today it can be more difficult because of the panel discussion here. Let's go back.
Global financial crisis revealed those weaknesses in the big banks and the large utilities, financial market utilities. And so there has been, as Claudio was saying, and Mervyn was saying, there's a lot of effort going into, and has been, in what do you do about money market funds? What do you do about the treasury market? These things are and I think the first order answers need to be changes to the structure of these institutions to make them stronger, more resilient on their own. I would say expanding the provision of central bank liquidity is not the desired response. It really is to strengthen these institutions. Our capital markets are quite vibrant and very different in what they do from what the banks do. And I wouldn't want to see the kind of prudential regulation that goes along with liquidity provision. I don't think it wouldn't be great to extend that too much into the non-bank financial sector. I'd rather work on structural reforms, which is kind of what we've been doing.
Klaus Eklund.
And again, we see a pullback here. So a lot of movement, a lot of false breakouts to the up and down side here, even on a 5-minute time frame. Let's go to a 15-minute time frame here. And we see we could hold the moving averages, trading above VWAP, still working on the breakout to the upside here. But 11,200 points is the resistance level, pre-market resistance. We managed to go above, but then we closed below. And yeah, we're still trying to push above. But you see on the higher time frames, parabolic SAR dots are here at the lower level. So it's still looking good, even on a 5-minute time frame. We will close this candle in about 1 minute. Here we closed it, and you see parabolic SAR dots are still below the chart, so it's still looking good. We closed above 9 EMA. Of course, we retest several times. You see, we sometimes trade below the moving averages. We trigger a lot of stop losses here, and that's why it's difficult to trade within the first 15-20 minutes, because the market tries all the directions and triggers all the set stop losses here on the upside and on the downside. And if you're not prepared for this, then your stop loss may be triggered and you are out of your trade right away. Therefore, I would always wait for the first 15-20 minutes minimum, maybe for the first half an hour, and wait for a clear market direction. So now we see it's uptrending with higher lows, with higher highs. So it's already looking interesting for taking on a long trade. We can never be sure that this will work, but it's looking more bullish than bearish today, or right now. It can change, but as long as we don't see lower lows here, closing lower lows, then it's not turning into a bearish trend right now. And the same on an hourly chart. So here I want to see the closing above this parabolic SAR dot, and then we will probably see the change of direction. More volume will come out on the full hour in about 9 minutes. So I will live stream until the full hour, and then we'll see market direction and maybe see the outbreak to the upside, or maybe just staying within this sideways trading phase here. What else do we have? Going back to VIX, still trading sideways, not at an important level, 22 points here. And crude oil still trading at the same level, below the 38% Fibonacci level. Natural gas making lower lows here at $3.65, but still above the previous lows of $3.52. Maybe we will see a retest today of the $3.50 level. As you can see, it is weak right now. And sugar. Still not a lot going on here. Just trading sideways. Let's see if we make higher highs today. We already made the pullback here. This is the pullback I wanted to see. Let's see if we can close right here. Then it's more interesting to be prepared the next days for lower lows. This is when I want to enter here. If we break the lows, I want to enter with more shorts into this sugar trade here. And Tesla still within the sideways trading phase, now down 1.2% right now. Was retesting pre-market lows here. You see the volatility is rising. Implied volatility is going to higher levels right now. So you will earn more option premium if you sell options right now. And you will have to pay more premium if you buy options right now. Sometimes you don't have to watch all the speeches and panel discussions and whatever. Just have a look at the chart and you will see the direction the market wants to take. Whatever the words are, whatever is said, just look at the chart and you can see what the chart wants, what the market participants want. And here you clearly see it tries to establish an uptrend. Yeah, it takes its time. It's especially in the first 15-20 minutes. There's a lot of volatility. Yeah, and that's not a really nice trend to see these huge up and downs, as we can see here. But the main thing we have to see is here the establishment of an uptrend, trading to higher levels. That's the important thing we need to see here. And it was not a bad thing to enter a long trade here. I didn't do because I already have a lot of contracts right now. I want to see higher highs than yesterday, then I can take on more. I always go in with some, close some at the high points like yesterday. Then I still hold some contracts for the swing trade and the other ones I day trade with. And the same today. I will hold some longs at the end of the day probably, and some I will try to close out at nice points. 5 more minutes, then I will close out this live stream. Let's see if we can close the full hour with new day highs here. Looking pretty bullish right now. No more words from Jerome Powell right now. It just takes some time. 4 more minutes. Let's have another look at orange juice. Still trading sideways here. This was January future. Let's see next one expiring in March. So March future, we still see this sideways trading phase right now. It's trying to uptrend here, but the same with the downtrend here. So you see this triangle move, and there will be the day we will see a strong push to the up or to the downside when we break out from this triangle here. Can be interesting to see, and then you can take on a trade. I want to short it, but I first want to be outside of this sideways trading phase. But I think that orange juice is a little bit overbought and should be shorted here at these interesting levels. But still watching it and not trading it right now. More interesting is still Euro USD as well as crude oil. We talked about crude oil last week here at this level here. And Euro USD, yeah, trying to go higher, but the breakout is not finished yet. But of course, when the markets go higher, then normally the money is flowing out of US dollar as safe haven and going back into riskier assets, and therefore Euro can get stronger like it is doing right now. Back to Nasdaq. 2 more minutes to close the hourly candle, and let's see when we close the hourly candle if we can stay above parabolic SAR. Yes, we are right now, and you see the crossing here of ADX, so also here on an hourly candle indicating an uptrend. And we want to see the change of direction here with parabolic SAR like we did yesterday when we broke here VWAP. 2 more minutes, maybe right at the Fibonacci level. 11,250 would be nice at day's high. How do you get your parabolic SAR to not include the wicks? Mine keeps switching due to wick touches. Because mine only reacts on the closing of the candle, not on the wicks. That's really important. Because you see here really often that we see, like here, we retest this level, but we do not close below. And therefore it's still an uptrend, as you can see here. So it's important that your parabolic SAR only reacts on the closing of a candle, and not on every price the candle is making, just on the closing level. I don't know which platform you use, Penguin, but look into the settings, and the parabolic SAR should only change when the closing is above or below this dot. 1 minute, 15 seconds. And yes, we closed above. Parabolic SAR dot is moving to the downside and showing us a change of direction, uptrending right now. The same on all the other time frames, the lower time frames. Like 15 minutes, still in an uptrend above all moving averages here, and the same on a 5-minute time frame. So it's looking good, but it takes some time and a lot of nerves because, yeah, we are always going to low points. But this gives a lot of room for new entries for longs. So you just have to be patient if you want to enter your longs. If you missed it, you will always get a new chance to enter new trades here. And it's still interesting to trade it to the long side right now because it's more bullish than bearish. But always have in mind that if you take on a swing trade for several days, that on Thursday we will have CPI index and therefore maybe a lot of movement depending on the outcome of the numbers. So be prepared for this. I will live stream this event on Thursday, and there we will see a lot of movement. Yeah, let's see what this trading day will bring us. Hope you will have some nice profits, and I wish you happy trading. We will see us at the latest on Thursday for CPI index, and I wish you some more profits this week, and we see us next time. Don't forget to subscribe to my channel if you haven't done so far, and we see us next time. Goodbye.